Hey, what's going on? It's your boy Billionaire Britt. How you doing today? How y'all doing today? Today we're here with the, I don't know if this the third video of BTC ATM strategy. BTC stands for Billionaire Trading Circle. Um, so today, I feel like in the last video I talked about premium and discount or whatever. You know what I'm saying? So in this video, I want to break it down, man. Just basically looking for entry, basically. So like I said, swing low, swing high. So draw the swing low to the swing high right here, and you extend it out. You get equilibrium. Equilibrium is right here. So you draw equilibrium. Once you draw equilibrium, you look for a fair value gap near equilibrium, at or below it. This fair value gap was overlapping it. So this the 15-minute chart. You could have looked for a buy. You could have just bought when price dipped into equilibrium, or you could have bought. You could have went down to the lower time frame, and once price came to equilibrium, you could have went to the 1 minute and waited for market structure shift with displacement. If it would have gave you opportunity. So as a matter of fact, let's go ahead and go down and just go ahead and see. Let's see if it gave you opportunity to enter. Based off the 1 minute. Now the 15-minute, you could have simply just bought when it came to equilibrium. But on the 1 minute, was the swing high broken? Yep. It was broken right here with the fair value gap. Right here. Price came into the fair value gap. You could have bought right here. So if you wanted a more precise entry with a smaller stop loss, you could have entered based off the 1 minute. Could have entered based off that 1 minute fair value gap, and you could have put your stop loss right here at the low of the first candle that made the fair value gap. Could have aimed for this high. Simple, nice and simple and easy. You see what I'm saying? So these are things that you can use as techniques to basically help you know if the market is at a premium or discount. Because if market is at a premium, you want to be looking to buy. If it's at a discount, you want to be looking to if it's at a premium, you want to be looking to sell. If it's at a discount, you want to be looking to buy. Because that's what the bank's doing. What we have right here, we got a swing low. Right here, we got a swing high. Right? We draw out the field from the low to the high. And when price is sporadic like this, like you see how it has a big old wick, you want to use the body of the low. So you want to use the body of the low, and you want to use the body of the high right there. Basically what you're doing is simply filtering in the noise. So once you filter in the noise, you have equilibrium right here. We have a fair value gap, a bullish fair value gap right here, but it's above equilibrium. As you can see, price came and touched equilibrium. It wicked through. It did not close below this fair value gap, which is a good signal. I would have went to the 1 hour chart because I like to be perfect. So I would have tried to see, was it a bullish fair value gap near equilibrium on the 1 hour? It's not. So based off that 4 hour, that would have been a good entry, but I would have waited for price to touch equilibrium and waited for it to reverse. Could have entered on go to the 15-minute time frame, right? So we know that equilibrium is right here. So we're gonna mark that out. So we know that we're looking for entries near equilibrium. So we know that once price gets near equilibrium, we look for entries. We have the hour 4 fair value gap. It broke through it, but it didn't close below it. It didn't close below the low of the first candle of the fair value gap, which was like right here. As you can see, it came up on the 15-minute chart. We're simply looking for a swing high to be broken with the fair value gap. This was a push, but no swing high was broken. Right here, you have a swing high broken. Swing high broken right there. Fair value gap right there. You could have bought. You could have pressed buy right here. When price touched that fair value gap, you could have bought. You see how I'm using higher time frame equilibrium to base my trades off of? Because I know that once price comes down and goes below equilibrium, we are now at a discounted price, so the bank's gonna want to look for buys. So once the banks are behind, basically the banks are behind you on this trade. Why? Because because price went to discounted price of the hour 4 price swing. The banks want a discounted price. As you can see, it didn't hang around below that equilibrium because it's discounted. When something is at a discounted price, it won't be at a discount for long, as you can see. What did it do as soon as it came below equilibrium? It's at a discount. Oh, they bought it up quick. They're not finna play around. They bought it up. Now, you don't enter right here because you wait for your confirmation. Your confirmation is for a swing high to be broken with the fair value gap. And it happened right here. Then you enter. Now you know that you have the banks behind you on this trade. Now you know. Look how far price goes when you have the banks behind you. This is a 15-minute time frame. This is a 15-minute time frame, bro. Look how far. 9-1. Come on now. So I basically want you all to get used to seeing this, bro. And it happens on all time frames. It happens on the 1 minute, the 2 minute, the 5 minute. But it's like when you use the higher time frame and base it off of that, like that's when you start to see where price is really going. Like I'm finna, like this is the 15-minute chart, right? I'm finna give y'all another example on this 15-minute chart. You see that's a fair value gap right there. Small fair value gap, but it's still a fair value gap. You see this low right here? You see this high right here? What's this white line? Equilibrium. It's a fair value gap below equilibrium. It's a discounted price. That means you might want to buy it. Oh my God. You get what I'm saying? Come on now. So, now that we went over that, I'm not gonna lie. I'm finna show y'all my strategy now, bro. I feel like y'all ready for my strategy. I feel like I done waited. I mean, I feel like it's been time. I know y'all, I done talked about my strategy in my day trade section, but we finna break it down, man. We finna break down how I trade. So, this delineates the new day right there, right? Alright. So, we got, when I trade London session, I like to mark out Asian session, high and low. So, to me, Asia session is basically the last 5 hours of the day. So this is the last 5 hours of the previous day, and I basically get the lowest point and the highest point of the last 5 hours. So this is the lowest point of the last 5 hours of the previous day, and let me see, and this is supposed to be 18. You could do 16 right here. So this is Asia's high right here. You can do the last 5 hours, the last 6 hours, the last 7 hours of the previous day. It's really to each his own. I do the last 5 to 7 hours of the previous day as my Asian session. It really doesn't matter. It's not gonna be a big difference. You get what I'm saying? This is Asia sessions high, Asia sessions low right here. So that's the first thing I do. I mark out the highest high and the highest low from the last 6 hours of the previous day. This line right here is midnight, right? So let's say this is Wednesday. and let's say this is Thursday. So this Wednesday right here, this line now is Thursday. You know what I'm saying? Now it's 12:10 in the like 12:10 midnight, whatever. Boom. So essentially, what I want to see is I want to see price break Asia's low if I'm looking for a buy. As you can see, we have Asia's low broken. So, oh, but I trade between, another thing, I trade between, every day you might not get a setup. Let me just say that right now for the people in the back. So I trade between these two. So even though I trade between 2 to 5 a.m. So this is midnight. Asia says low, Asia says high. This 2 to 5. So I'm looking for Asia's low to be swept. It was swept right here at 3 o'clock. So I go down to the 2-minute chart. You can enter off the 5-minute, the 2-minute, the 3-minute, whatever you want your entry time frame to be. It could be the 15-minute. It just all depends on you as a person. To me, mine's change depending on the scenario of the market. Sometimes I do 5 minutes. Sometimes I do 2 minutes. It really doesn't matter. So once Asia's low is broken right here, you look for a swing high to be broken with the fair value gap. So right here, you have a swing high that was broken. It was buy side liquidity above that swing high. So you have a swing high that was broken. You look for fair value gap. Now, if the price swing that took out price makes multiple fair value gaps, if the price swing that took out that high that you was looking for the market structure shift, if it created 10, 20, 1, 15 fair value gaps, 3 fair value gaps, you always want to enter at the last fair value gap. So we're going to take this one away. This was the last fair value gap that was created after it broke this swing high. So when price came down into this fair value gap, I simply would have bought at the high of the fair value gap. So I would have bought right here. I put my stops below the low of the second candle. Some people teach to put it below the first. That's what you're supposed to do. Some people teach to put it below the second. I like to put mine below the low of the second candle that creates the fair value gap. And I aim for a 2 to 1. But let's say 3 to 1 or fucking even 4 to 1. I would have got a 4 to 1. Boom. So I would have entered at 322. It would have hit my take profit at 410. That's not even an hour. So I could have risked 1,000 to make 4,000 in less than an hour, which is crazy. So this is essentially my strategy, and vice versa for selling. When I'm selling between 2 to 5 a.m., I want to see price take out Asia's high, and once it takes out Asia's high, I want to see a low broken with the fair value gap, and I want to see price come into that fair value gap. That's simply all I'm doing. I literally trade between 2 to 5 a.m. every day. Like, that's how I trade. This is how I trade every day. This is just a buy scenario. Now, granted, yes, it did drop down low and come here. And for the people who worried about this move right here, those are people who ain't gonna never make money in trading. Because it's like, you have to ask yourself, do you want to make money or do you want to be right? I want to make money. I don't care about being right. As you can see, I bought. I was wrong in direction because it ended up dropping, but I made money, so who cares? When I'm in Neiman Marcus, when I'm at Lennox, when I'm on that airplane, do you think people gonna be looking at me like, oh, he got the direction wrong? Like, no, nigga, I still made money. It's some people who get the direction right and lose. The fuck? Like, you know how many people get the bias correct of the day and still lose? This would have been a scenario where I got my bias, meaning like the direction of the overall day, wrong and still made money. But was I really wrong if I made money? That's a question you just gonna have to ask yourselves. So yeah. And I don't know if I went over fair value gaps in my past videos, but I'm finna go over that too. I'm trying to end this series. I'm getting straight to the point. I'm making it compact for y'all. So a fair value gap is a 3 candle pattern. All right? It's a 3 candle pattern, right? So pay attention to everything between these two lines. So a fair value gap is a candle. It's a 3 candle pattern. You have the first candle. The second candle opens and it shoots up. The third candle closes. The third candle low comes in So a fair value gap is when it's a 3 candle pattern where the first candle and the first candle's high and the third candle's low don't touch, but it's a candle in between that separates. So this candle's high and then the third candle's low. It didn't touch. So essentially, basically, when it's a bullish fair value, this is called a bullish fair value gap. Bullish because it's a buy, because price is going up. So it's called buy side imbalance, sell side inefficiency, and that simply means that there is an imbalance. That's all this is a buyer imbalance. So it has to be rebalanced by sellers coming into it. That means this candlestick, no sellers was able to get in this price move. So since it's a buy side imbalance, sell side inefficiency, meaning there's an imbalance of buyers, the sellers were inefficient, meaning lacking, wasn't able to come in. By default, price has to reprice and give them an opportunity to enter. So price has to come into this area. It can come to the top of it like it did here. It can come to equilibrium. It can come right here. It can come right here. Anywhere in here. But it have to give them a chance. It gave them a chance right there. It gave them a chance right here. It rebalanced itself. When price comes down back, this is the low. When price comes to the low of this candle, when it comes back to the low, you enter for a buy. As you can see, if you would enter for a buy when it came to this low of this candle, it wouldn't have even went against you. You get what I'm saying? Same for selling, right? So I'm gonna give you an example of a bearish fair value gap. So pay attention to these candles, these 3 candles right here, 1, 2, 3. So it's when you have the low of the first candle and the high of the third candle, they don't touch. So as you can see, those two, the low of this candle and the high of that third candle didn't touch, and you have a big down candle in between. That's called a bearish fair value gap. Basically, it's called a SIBI, sell side imbalance, buy side inefficiency. So the buyers were inefficient. So what does price have to do? It have to rebalance. So when price rebalances to give buyers an opportunity to get in or to get out of their position, that's when you enter for a sale right there. So when price comes and touches the high of this third candle, which it did right there, when it comes back into that fair value gap, that's where you press sell. So you would have wanted to sell right there on that third candle. And as you can see, price dropped. So these are examples of a bullish fair value gap. Bullish means up, buy, long. Those are all bullish. Bearish means bearish, downtrend, short. So long is buying, short is selling. Bearish is a bearish fair value gap, meaning it's a fair value gap in a down direction. Bullish is a bullish fair value gap, meaning it's a fair value gap in the up direction. So anything I said in this entire video is simply just that as it is, and this completes my strategy. You all may want another scenario. Let me see if I can give you all another. Oh, let me go check out my US 30 trade. I'm supposed to be placing another. I ain't supposed to be placing no trade. Oh my God, I was supposed to be buying US 30 again, bro. Oh, let me see. I'm still good to buy. I'm gonna set a limit, y'all. I ain't gonna lie, I ain't supposed to be trading. But this New York session, I'm just gonna risk $50 on this trade. I just want to see how it's gonna pan out. Cause basically we hit that hour 4 fair value gap. So I'm gonna set a limit right there. Put my stops down there. Put my TP above that high right there. And we just gonna risk a little bit of money. Like I said, I'm just trying to test something out. So I'll just risk like $60. Oh, this Friday though, this is a challenge. I don't know if I can hold a challenge to the end of the week. So if this probably would have to be a 1-to-1 then, or a 1-to-2. Cause if I risk 60 and it don't come to it, I don't know if I can hold this trade over the weekend because of the rules of the whatchamacallit. So I'll just make it a 1-to-1. I'm basically just trying to test out something. Alright, so boom. So we'll go to US 30 Pro. I'm basically gonna show y'all. I'm gonna see if I can show y'all a bearish scenario of my strategy. I think this was a bear scenario. Let me see. Oh yeah, we might have a bear scenario today. Oh yeah, cause I sold US 30 today. Yeah, so I might as well just use today. So look, you all getting some more game, cause I actually sold US 30. I made $800. So boom, we finna go over what I did. So, and actually in this trade, we did not take out Asia's high, which is crazy. But I'm gonna tell y'all why I sold though. So basically on US 30, I was looking at the hour 4 chart, the 4-hour chart, and I seen that we just took out this high right here. So you all know once we take out a high on a higher time frame, we can be expecting for price to retrace, especially if it makes a swing high after it broke that high. So on our 4 chart, we created a swing high yesterday on the hour 4 chart after we broke this high and took out buy side liquidity. So I was looking for price to come into this bullish 4-hour fair value gap, because like I said, when it's a long wick, you can use the bodies, the lowest body of the swing low and the highest body of the swing high. As you can see, we are right below equilibrium, so that's a discounted price. So the banks are going to be looking to buy that. So I was like, okay, since we up here, we just took out this swing high on the hour before. We just created a swing high yesterday. I'm gonna be looking for shorts until price gets into this fair value gap, because it's at a discounted price. So when we came into the markets today, I seen that Asia high was struggling to get taken out, right? So we did not take out Asia's high, but we did take out this high, this significant high on the 15-minute. And like I said, you all know I trade between 2 to 5. So between 2 to 5, I'm looking for, it doesn't necessarily have to be Asia's high. I would like for it to be Asia's high, but if it's not Asia's high, I'm looking for a significant high on the 15-minute chart to be rated. And it did it right there. Even though it didn't take out Asia's high, this still was a valid trade. So once it took out this swing high, I was looking for a swing low to be broken, which it did right here. Once this swing high was taken out and this swing low was broken, the last fair value gap, this swing right here, the last fair value gap that was created. Remember I said when it comes to the strategy, it could be multiple fair value gaps created, but you want to get in at the last one that was created. You see this low? You see that high of that candle? Draw it out. That's your bearish fair value gap. Right? Once price comes to that bearish fair value gap, what you gonna do? Sell. Where you gonna get out at? You're gonna get out at this bullish fair value gap on the this bullish fair value gap on the hour 4 chart. That was your area of liquidity to get out at. So as you can see, price came, tapped. They gave you 2 chances to enter. It gave you 2 chances to enter on the 15-minute chart. Gave you 1 chance right there. Right? And then it gave you another chance right there. It gave you 2 chances to sell. And what did it do? Take off. Where you would have put your stops at? You would have put your stops right here, above the high, at the high of the first candles, of the high of the first candle that created the fair value gap. So you would have put your stops at this thick white line, and you would have put your take profit right here at this thick white line, and you would have entered right here at this thick white line, right? And you would have been shorting, you would have been selling. Stops would have been right here at this thick white line. Take profit would have been down here at this thick white line. You would have made a 4, so you would have risked 1,000 to make 4,000. This trade panned out in about, if you entered on the first one, 15:30, an hour, 15:30. Boom, an hour and 30 minutes. If you would have risked 1,000, you would have made $4,000 in an hour and 30 minutes. Ain't that crazy? That's crazy. But yeah, like, this strategy is pretty valid, man. This is how I trade, and it's like I just can't stop doing it. Like, even right now, like on the other chart, I put a limit right here because look, we came into this hour 4 bullish fair value gap, and then on the 15-minute chart, we just broke this swing high. It's like this all I can see, bro. This all I can see. We broke this swing high on the 15-minute chart right there. And then what did we create when we broke that swing high? It's only one fair value gap in that leg. Boom. We got a bullish fair value gap, y'all. So when price comes to this bullish fair value gap, what we gonna expect for price to do? If y'all been listening to everything I've been saying, we're gonna expect for price to go ahead and get up out of there. This is what we will be looking for. We'll be looking for price to do this, but you want to be patient. It's not gonna happen instantly. Sometimes it does, sometimes it don't, but you definitely want to be patient though, for sure. You want to be patient. Like, it actually came and tapped it in, but they didn't even tap me in on the other trade because I don't even see nothing, and it's about to take off possibly. But yeah, man, this is basically how I trade, man. I wanted to keep this series short, like, because I didn't want to make a lot of videos, because I understand that people have short attention span. So I'm like, if I made 3 videos tops, just something to give them a general idea of what I do, and this is more general than ever. I literally just showed you exactly how I trade, and not only did I show you exactly how I trade, I showed you exactly how I traded today. Like, I don't know if you all can see. I ain't gonna lie, I've been taking a couple of L's, but if you look at today, my closed positions, it's not showing the trades I took today, but today I took 2 trades and I made 400 and some change a piece, totaling to $901. You can see my total P&L for today, actually, as a matter of fact, $901. But yeah, and I made that on this right here. On this, I sold right here and I got out right here, and that's where I made that money at. So yeah, man, this really concludes the BTC ATM strategy series. If I feel like I missed out, I really feel like I didn't miss out on nothing, because the strategy is simple. I just wanted to break down candlesticks, fair value gaps, for people who don't understand what it is, man, and just keep it simple like that. So when you all hear me say, one more thing before I go, when you all hear me say buy side and sell side liquidity, basically, like, above old highs and above old lows is liquidity, right? So there's liquidity above these equal highs. There is liquidity above those equal lows. You have internal range liquidity and external range liquidity. Internal range liquidity is fair value gaps. Boom, right there. External range liquidity is highs and lows. Highs and lows. So on the higher time frame, essentially, if a high is taken out, a swing high is buy side liquidity. So once that buy side liquidity is taken out, you can expect for price to come back into the range, back into the extension layer that took out the high, and come into internal range liquidity, which is essentially a fair value gap, right? Once price takes out a low, they call it a liquidity raid, because once price takes out a low, it's a fake out. It's tricking everybody thinking it's going down. It's simply just grabbing liquidity from the people who bought right here and put their stop loss under this area. It's simply coming to grab all those stops, all those liquidity. There's buy stops and sell stops resting above and below swing highs and lows. So below this swing low is stop losses. It stops. It's gonna come and take them stop losses, take all that liquidity, all that money to go higher. You get what I'm saying? And that's how the market moves. As you can see, this swing high right here comes out. A lot of people, when it's breaking out, a lot of people want to buy. When y'all be looking for buys right here, because it's breaking out, oh, it's in the uptrend, it's breaking out. People like me, we looking for sales. And where we looking to target? We're looking to target internal range liquidity. So we're looking to get out at or below equilibrium. We're looking to get out at these fair value gaps. So we entering up here and we're looking to get out right here or right here. And as you can see, it came all the way down right here. It took out this liquidity below this low. It barely took it out. You can see it barely wicked it. You see that? It barely wicked it, but it still took it out. And once it did that, what did it do? Shot up. It couldn't take out this liquidity and it came back down. When it came back down, it made a higher low compared to this. So what does that mean? That means that we can expect for price to keep rising. That means we can expect for price to come back up and take out these relative equal highs. And as you can see, we're on our way right now. So with that being said, man, it's your boy Billionaire Brick. I hope this 3-video series was insightful for you. I'm sorry if I masked a lot of things into this video, but I was simply trying to get it over with because I feel like if I kept procrastinating, it was never going to be done. But I feel like, I mean, all you have to do is just watch this video maybe once or twice, and you'll probably understand the way that I trade. If you have any questions on the way that I trade or any questions on anything that was taught in this series, you can simply respond under any YouTube video in this series, and I'll respond to all questions. I don't leave nobody hanging. Anybody who asks me a question, I'll respond no matter what. It may not take me, it may take a day or two, but I will respond. Most of the time, I respond within the same like 24 hours that the person sent the text message. Yeah. So yeah, man, that's gonna conclude this series. I will be dropping my Discord soon, maybe in about a week. I'm gonna go ahead and drop my Discord, but like I said, it will not be free. It will be roughly $20 a month. But like I said, in the Discord, you will be able to trade live with me. I trade live Monday through Friday, 2 to 5 a.m. So you will be able to see me in real time in action. You will be able to see me marking out my charts. You will be able to see the way I think. You will be able to pick my brain and ask me unlimited amounts of questions. You will have live access to me in the present moment. And you can ask me whatever you want. You can show me your charts on the Discord, and I can tell you what I think, or I can critique, and I can help. You know what I'm saying? I can help you see better. And that's what it's all about, helping. So with that being said, it's your boy Billionaire Brick, and we out. Go ahead and end this, man. Y'all folk have a blessed one, man.